Dan, let me throw up this. It's becoming quite an evergreen chart when it comes to just the how low can you go impact of iron ore prices at the moment. This is drop and give me 50. Iron ore prices have reversed now 60% from that May peak. When you take a look at the correlation between Evergrande bond prices and the iron ore price, it's almost kind of, you know, in step with each other, right? So where do we find a bottom in this market?
Yeah, that's not surprising. We're seeing that correlation at the moment. I do think the Evergrande crisis is at the core of this sell-off, not just in the iron ore and steel markets, but the broader commodity complex. I mean, yeah, the housing market has always been a pretty important part of any major economy, and certainly for China, its relationship with the steel and iron ore market is obviously very, very strong. So, you know, that confidence in that property market continuing to grow has clearly been breached, and after hitting those record highs, that sentiment has turned very quickly. And look, it's a market which, in a sense, has very, very low support levels. I mean, the cost of production of iron ore itself, is in the $20 a tonne mark. So, that doesn't really kick in anytime soon. So it's going to be about, I suppose, confidence in manufacturing and construction activity in China, which will eventually stabilise prices. Now, we are entering that normal seasonal pickup. We see steel production generally start to recover into the year end, but this is coming against those environmental-driven policies where authorities are trying to constrain output of the steel industry at the same time. So, it's really difficult to get a finger on where things are sort of going to stabilise, but I do get a feeling that we're probably not too far from the bottom, and we could potentially see a little bit of a bounce into year end, but it's going to be still a pretty wild ride.
As you say, we have Chinese steel production in August falling to the lowest since 2008. The stockpiles keep building. You've got to be long-term bearish, right, when you take a look at the environmental and policy direction that China is going in, regardless of what happens to the property sector.
Yeah, no, absolutely. The steel industry itself is, a relatively mature market now. Certainly, the economy as well is still transitioning, away from that more investment-led model to the services-based one there. So that will see peak steel demand in the not too distant future, and ultimately, start to weigh on iron ore demand. So yeah, longer term, I think we're in a probably a structural decline unless we see really tightening of global supplies, and that is happening in other commodity markets. But I do feel like this is probably the last hurrah in terms of that fundamental growth in steel demand, and that will obviously weigh on the rebound, the extent of the rebound that we could see in iron ore.
So, Dan, we knew about the tightening scrutiny in the property sector in China, right? So how much of that has already been priced into some of these metal prices, and how much more, what's changed with the Evergrande saga?
Well, I'm not too convinced that it was completely priced in. I think there was certainly expectations that while constraints were being placed on the property market in some of the Tier 1 cities, there was still very strong growth in Tier 2 and Tier 3 and the more broader sort of rural sectors. And that has been intimated at by authorities in China, the continued support and development of the rural sector. But, this debt crisis, I suppose, does shape those that confidence that this will be that weakness in Tier 1 cities will be offset by other markets, and so it is I suppose the market and the traders are trying to assess where things will eventually land. I mean, I do still have some hope that things will stabilise, and the crisis itself is just more a shake to confidence, but clearly at the moment, there's a lot going on.
When do you expect the energy crunch in Europe to stabilise? What's going on over there, and what's happening to coal prices across Asia as well?
Yeah, well, I mean, I can't see that abating until we see inventories of certainly gas, but some of the other fossil fuels normalise. I mean, utilities there have been really keen to seek cargoes of demand of LNG in particular, to I suppose fill in that gap that we're seeing from renewable energies, which hasn't clearly produced as much as they'd hoped this season. And obviously coming into winter, there'll be a close eye on sort of weather forecasts and how that will look for the heating season. But for me, it's still around that dislocation between the electricity markets and the fossil fuel markets, and I can't see that abating anytime soon. I expect to see coal and LNG prices remain relatively high for the foreseeable future.